Hey, good morning, everyone. It's Coach Chris coming at you. It is Sunday morning, January 5th, 2025. Um, I had a request by one of my viewers to do a video on how I set up the opening range. And so I figured I'd spend some time with it and show you how I do it. Remember, I am not a financial advisor. I am simply a trader like the rest of you. And my style is the way that I like to trade. Your style may differ. You can see there's a government disclosure in the link below telling you that trading futures is risky. You can and probably will lose money. But the goal of me filming these videos is to show you what I do, strictly educational. This is what I do. And if it fits your style or looks like something that is helpful for you, by all means, use it. If not, don't. I guess it's as simple as that. Um, so let's just talk about, for a minute, the opening range. Some people also refer to it as the initial balance. And there is a slight difference between the opening range and the initial balance. And I'll just go over here. I Googled it beforehand just to give you a little idea. Normally, when we're talking about the opening range, we're talking about the first part of the trading day after the initial New York Open. I'm on Central Time, so for me, the market opens at 8:30 a.m. And so what we do is we start at 8:30, and then people use different time frames for their opening range. I typically use the first 15 minutes, the first half hour sometimes, but usually the first 15 minutes and the first 60 minutes. And the reason we do that is during that time period, when the market first opens, it's establishing kind of an indication of what the day may be like. Remember, prior to that, the overnight session and the pre-open session, there's much lighter volume. And so it's easy to see manipulation going on and different trends going on prior to the open. But once that 8:30 a.m. Open happens, now this is real trading. There's orders sitting there waiting. Some people put in orders to hit when the market opens, and the volume and volatility increase dramatically during that time. And so it tends to start to establish what kind of a day we may be having that on that particular day. So the opening range is usually the first part of the open, and I have here some people use a 15-minute, 30-minute, 45 or 60-minute. There's some people that use the first minute or the first 5 minutes, and then the initial balance is usually the first 60 minutes. And with that, they are also including in a volume profile to see where has most of the volume taken place within that first 60 minutes. The way that I use it is more to see our price boundaries, where resistance may be or support may be established during that period. And so I'm starting with a blank chart here on TradingView, and I'm going to just show you quickly how I do that using the replay mode. So I'll get this started. This is about 8 o'clock in the morning now, and obviously this is going much faster than it will. I'm just going to slow it down a minute so I can explain that. So we can see we're coming up on 8:30, and we're just observing at this point. Another thing is a lot of people, myself included, don't usually trade the first 15 minutes of the market open simply because there's too much volatility going on and price movement is just too erratic. And so what I do is I use this box function over here. I'm going to pause this for a second. so I can explain it. I use the box function, and I go over to 830. This is 830 now, and I just draw a blank box, and you can choose whatever color background you want. This just happens to be green. And I go to 845, okay? And then I just, whoops, I thought I clicked it. Okay, so there. So, and this is just sitting there as a placeholder. So as price gets into here, then I will expand or contract this box to correspond with the different levels. Once that initial opening range has been established, I will sometimes start trading. Otherwise, I'll continue to observe until things start to settle down. Now, what we're looking for is, are these ranges going to be respected after it's established? Or are we going to have what's called a breakout, which would be price will bust through and go higher, or a breakdown? Now, usually when we see either one of those, what'll happen is it'll break up, come back down, hit the top of that opening range, and then that will be resistance, and then it'll go up or down, on the other end from there. Now, one of the things I want to just quickly say, remember always that when we draw lines on a chart, that doesn't mean that price is going to always respect that to the tick. A lot of times it will, and it's kind of freaky when that happens. But a lot of times also what will happen is this will act as kind of a range, plus or minus, especially like on the NQ, which I have on this chart here. It will be a plus or 5, 10, 15, 20 point range. So it'll come up into that area, bounce, not necessarily always respecting that to the exact tick. Okay? I have a lot of caffeine this morning, so I apologize if I'm talking really fast. So I'm going to slow down here a little bit as this goes. So I'm going to restart this now, and we'll watch as the price comes into this area here. I'll speed it up just a little bit so that we don't have to. So now we're what are we? We're about 20 after 8 in the morning. I'm going to move this out of the way so it doesn't distract us. Okay, and so now we're coming up to that point that I had put that placeholder. Okay, I'm just going to stop it for a second. And we notice what happens right here at, let's see if at 8:30, you can see we get a big bar with a wick, and price is immediately going. So I'm going to adjust this now. Now, obviously, when the market is open, you're going to be doing this in real time. So you can see here at about 8 o'clock, it did steadily start to increase. So I'll restart this. Coming back down, pulling back. It's wicking up here. Oh, and look at that wick. Man, that was huge. It happened very, very quickly. Okay, now we're coming up. Okay, and now we've gone. Let me just make sure I've got the right time here. So I'm going to come back down. And so now, I want to get this. It's hard to see that wick. I got to go. There we go. Now remember, this all is happening in real time, so you gotta, after a while, at the first few times you do it, it's a little trickier, and then we're gonna move this up to the bottom of that wick. Okay? So now we have our opening range established, at least the first 15 minutes. So what I do is a couple of things. I go up to this top line here, which is 21,435 and a quarter. So I'm just going to go right over there. And what I do is I snap a horizontal line at that point. And what I do is I color mine orange, because orange starts with the same as the opening range. That way, when I see an orange line on my chart, I know it always relates to the opening range. And then I do the same on the bottom. Now I'm going slower. In real time, you can actually, once you've done this a few times, you start to do this really quickly. And then I'm going to take my ruler tool and I'm going to measure And so, believe it or not, it's very deceiving the way I have this chart laid out. That opening range is 158 points during that first 15 minutes. So you can see it covered a lot of ground. And so what I do, that 632 ticks, I'm going to go up to 316 ticks, which would be half of that area. Okay, that stays on the chart just for a second. And then I do the same thing right there. So that's the midpoint. Now, for this chart, I usually keep a separate chart. Sometimes I do it on my primary chart, but a lot of times I'll keep a separate chart of this because I like to keep these clean to see where we are in relation. The reason I do that midpoint is a lot of times that will also act as a resistance or support zone, and it also gives us a point of reference of where we may be at within that zone. Okay, hopefully that makes sense. But you can see here 155 point range. So now I'm going to start this back up, and then, well, actually I'm going to do this right now as long as I'm paused, and then I can explain what I'm doing here. So now I'm going to start at 8:45, and I'm going to go out to 9:30 with a placeholder box. Okay. Boom. So we're doing the same thing. You can make this a different background if you want. I'll just do that too for the sake of this video, so we can see the difference. So the first 15 minute has been established. Now we're going to continue on. You can start to trade now if you want. And some days, I mean, this is a pretty big range already we've established here of 155 points. I mean, some days we don't see that in a whole day. So if you want to start trading, you can, or if you want to wait and let this thing settle down, that's not the end of the world either, okay? Unless you see a setup using your technique that you really, hey, I got a setup here, I'm going to take it. Then by all means, because you can always go back also. You don't have to necessarily do this 1 hour initial balance or opening range here as the market is, you can trade and then come back later and mark these boxes out if you want. That's strictly, up to your style. So let's continue on, and then I'll make some commentary on this. So we're coming in. Now look what happened. So far, it is respecting that upper range. You can see here it wicked through that upper level, but otherwise it respected it. Now we're coming down. Let's just see, okay, a minor breakout, but look what happened. Now, see what I was explaining earlier about how this is a line on the chart, but you actually have to think of this as a zone. Okay, when you're trading, like I say, it's not always going to respect it exactly to the tick. You can see here, what did we go above? Maybe 2 ticks up to point, maybe through. And so what they're doing is they're getting liquidity, but they're also testing. What is up there? Is price being accepted up there? Same with below. Okay, so this was the first test here of the lower, first test of the upper, and we're going to watch that because we're coming up now to the end of this initial range. So let's just continue on just a little bit further. Okay, boom. Now we're done with that. So what we can do here is we can go, move that right up to that bottom, and you'll notice on the top, we just went through barely, just right to there. Now, normally, with just this, I'm not going to snap another orange line there. It just will block the chart, and it's really not necessary. It's close enough to that. With this one, I am going to put one here temporarily. I may erase it later on because, like I said, I don't like to get too many lines on my chart. But here again, so now we know when we're later in the day when we see these orange lines, we're within this opening range and initial balance. Now, we've established. So this tells us, are we going to have a range day, or is this going to break one way or another? And so what now a lot of traders are going to look for is that initial break. Are we going to break higher, or are we going to break lower? And normally what we want to do is we want to watch that, because as I said, normally when it breaks, it will come down, do a retest, and then off to the races, or come down, retest, and down. So we'll continue to monitor that aspect of it. And let's just look at a few things here. Remember how I drew that middle line. So let's look at what price action did. We established the first 15 minutes. It pulled back, okay, right here to this middle section. Look what it did. It bounced up a little bit, came back through, not all the way down to there, about halfway in that zone, came back up in a big wick to test that upper, back down to the, almost like it would be testing VWAP, back up, tested, and then look what it did. It went through liquidity all the way back down to that lower zone and actually broke through it a little bit and then back up to the midpoint. So let's just continue on and let's just see what happens here. One other thing I wanted to say, I usually leave these on my chart for the initial trading day and the next day, because what you'll find is the next day, sometimes price will still respect these lines. And every day is a little different. Now look at how it's covering right in this area, okay? See how it's just staying right around that midpoint? At some point, though, we can expect it's going to go up and test the top or the bottom of the range. This is a 1 minute chart, remember, because I wanted to get more of the idiosyncrasies here. You can trade it however you normally like to trade. For this portion and for these purposes, I just thought for illustrating. Now, okay, let's look. Now we're starting to get up into the upper area of this range. Test, test. Okay, now let's see what's going to happen. Okay, I'm just going to back that up and see if what I'm thinking is going to happen happens. Let's just go right back to here. So we came down, we tested that midpoint, and now we're coming up. Now what we're looking for is a piercing of this upper level, a retest, and then, or is it just going to go up? So what we're thinking probably at this point is we're looking for a setup to get into a long position right now. Unless it hits here and bounces back, then we may consider a short from like it did earlier here, test, it gets rejected, and then we'll come all the way down to the range and maybe continue. So remember, this is 150 points. Let's just see from right. So say we got that liquidity check and you got in right, say in this area, that's 130 point move in what, 907, about 15 minute time period. So let's just continue on and see what happens here. So we're coming up. You can see some big wicks to the top. Okay, so now we've pierced it. We rejected down, but now we've broken through. Retest, retest. Okay, what's going to happen? I'm going to just put a simulated buy on here, and let's just watch this and see what happens. I'm going to put a stop loss down here, right here, and let's just see what happens if it comes down and retests this, or if it's going to be off to the races. Okay, so I'm going to just put a take profit. Let's just put it up here temporarily at $100. I mean, which for a micro would be, well, let's just go 200 just so we can see if it actually, okay. So now it's coming back down, just kind of ranging sideways. Remember, we're still in holiday mode, so, that may be part of this. because this chart is for Friday's price action. And now it's Sunday. Okay, so it's coming back down. Not really doing much of anything at this point, just kind of consolidating here. So we may end up getting stopped out. I don't know how that got moved down. I wanted to go, well, I know I had that at that former level of resistance right down there. I'm going to put it there. Okay, so it's not really breaking today. Some days will be like this, you know. You'll just see this consolidation for a time period. Now it's coming up on noon. And let's just see. I can't remember honestly what happened on Friday. I traded later in the day. So it's just kind of hanging around here. If this gets up to $50 or $100, I may move the stop up on here to just protect the trade. But let's just watch this. Okay, now we're starting. See how we're starting to get some creeping up. So I'm just going to go here just to get my commissions, $3 at the moment. But now let's just move this up. Okay, you can see now. So I'm going to move this up to 50. You can see how it's slowly steadily up. Right now we've got 120. Move this up. We may get more. Okay, 120. If this gets, you know, big rejection. Still consolidating now. You know, now we've been in this trade quite a while because it's now coming up at 1 in the afternoon. Like I said, I honestly forget what happens here. 140. So I'm going to move this up a little bit to where those wicks were $66 in profit. This is 1 micro, remember. So you're only, you know, it's $2 a point only. You know, and we've already got 30, what is it? No, 150. So, you know, we've got 70 points of profit, 75. Okay, we're at $172. I'm going to move this up to $100 and just see if we can, you know, if we can get a run to the upside. I mean, we've already locked in $100 per contract, you know. So I normally trade 5 micros when I trade. So, you know, we would be up 500 at this point. Oh, okay, stopped out. Let me just pause this. So we finally came back down. Now, here's the top of that opening range. So let's just see. We'll continue on. I've got a few more minutes. I can keep going just to see. Okay, so that's the price action so far. So we had this initial break above the orange line, which was 50 points, oscillation, consolidation. Then we had the breakout proper, a little pullback. And let's just see what happens, how far this actually, because if this pulls back into this range, I would be very interested in a long, because we have this now for support. You can see this price action had been defended pretty well earlier in the day. And so it's likely, you know, that it will do so. You know, we had a test. Well, what happens with resistance once you break through? Now that becomes support. Okay, and so what we've done is, let me just pause this for 1 second and just show you what kind of I think is happening here. So we had a range that was being established. We then moved up, and now it's establishing a little higher range. Okay. Yeah, come on. And so price tends to do that. Like it'll move up, consolidate, it'll either move down or move up and then consolidate again. And so that's kind of what's happening here. Now, right now it's hard to say this level here is an important level, because if it comes down and does pierce through this and start heading down, I would think then we're going to be headed lower. Okay. If not, I would say we're probably going to go back up. But I honestly can't remember. But also remember, well, it's a little late in the day. Now I see we're almost up to market close. So let's just be very cautious here. And I don't anticipate a lot of more price action, but we'll see. So see if it's going to get, okay, there's the market close. Okay. So here's what I'm recommending to all of you. Start to add the opening range. I'm not telling you what to, this is what I do, okay? I got to be careful with that because, like I said, I'm not a financial advisor. This is just for educational purposes. But I think it can help you. And I just noticed one of the patterns we look for is what we call the classic M, where you get a move up, fairly substantial. And I'll just put this over here to illustrate. So we get a move up. We then get a pullback. Okay. And that distance will vary. In this case, it's to right there. And this actually is much further down. So we go up like that. Then we get another push up. Okay. And you'll notice in this case, almost exactly the same level. And then it starts to come down to here. Well, what is that? It's an M, okay? Now, what will happen is this leg will come down at least equal to the bottom of that M, and very often will come about 3/4 or more of this initial move. And in this case, that's about what I would say this is done, okay? It's called the classic M pattern. I didn't even realize that till I looked at this. Let me move this over so you can see it a little clearer here. And you can Google this. There's a lot of YouTube videos and different, see? So you can see up, back down. This is actually a little lower. Okay. Comes back up. And when this starts to retrace down, we know we're going to get at least to this point here to complete the M, or 3/4 of the way of this initial establishment of the M. And that's about what I would say that is. Just to give you an idea of the scale here, from the top of the M to this point, that's 100 points, okay? To the start over here, 190, and over here, we ended up at 170. So you can see how, okay, once this starts and we get this big bar down and these continuations, you could enter into this range here, knowing that you're going to get at least from here to the bottom of the M, which is 50 points, and more than likely about 3/4, which would be 100 points. So that would be a nice little 100-point trade right there, just off that basic pattern recognition. Now, the other thing you'll see is the opposite. It's called a W pattern, and that's on the way down. So it'll be the same as this. Let's bring this down. Except on the short side. So we'll get a leg down. We'll get a leg back up. I drew that wrong. No. You get it'll just be a W instead of a M. Okay? So you can Google that M pattern, and you'll find a lot of video, the M and the W pattern. Very, very classic symbols. Okay, let me get rid of those. Okay, so you can see here, we established our initial range, 15-minute. That's what I established as my first initial opening range. That's the green box. Snap top, bottom, and middle. Okay? Then we continue with a new box, which will extend that another 45 minutes to 9:30. Once that is established, if the top or bottom is substantially expands that range, then go down and snap lines at those points. Now, I'm just going to do one more thing. Now, we have that established. I'm going to grab my tool here, and I'm just going to show you. I'm going to go out to this point where we finally break above it, and you'll see what I'm going to do here in a second. I'm going to change the color on this to, let's just go real light blue, just so we can see. So this is the first hour. At 9:30, the next hour, what did we do? We traded in this upper half of this range, okay, for an additional hour. Now, some people are trend traders, which I like to be, where you're going to get these big moves. Other people are what are called range traders, and some are both. And what a range is once you see an area like this, price will oscillate within that area. It's some frequency. And you notice here, so what do? We go up, we come back down. We go up, come back down. Go a little higher this time, come back down. Now we're going higher. We break through that range, and then we're off to the races. So price will very often respect those ranges. And now what you'll see, though, it'll vary. This one happened real quick. This one happened it went up quickly, but it came down much slower. This one went higher and lower and actually at a kind of an accelerated rate. And then this one really took off. So you're looking for patterns. And so, like in this case, let's just say you're observing this, and all of a sudden you notice, hey, let's just see, is a range going to be established? This comes back down. Once it passes through this orange line here, the likelihood is now it's probably going to reverse at some point, and you'll notice what happens. Big liquidity sweep and a reversal. And so let's just assume you noticed it here. That's a quick 30-point scalp. This obviously was the trade. Right here, from here to here, 150 points. That was obviously, this was another nice one. Before I go, just remember, you're not going to get in at the perfect time. You don't have to, okay? You have to learn to recognize a trend, and then what you're going to do is get in where it's safe to get in. So now it bounces off this line and is coming back down. And so what are you thinking? You're thinking, well, this looks almost like we're going to be heading down. And so, well, if it does, we know we're going to pick up probably 50 to 100 points minimum, maybe even more. But what is my risk? Let's just say I want to get in short somewhere once it breaks, say in this area. Well, what is my risk if I do so? We know that this line up here has been respected in the past. This orange line has been respected once, twice. So that's about 35 points of risk, correct? So let's just see here. I want to get this one, actually. I want to get a short position. And so let's just say we're looking at this price action and we're starting to see a down candle. Let's just say I'm going to get in short if this thing breaks below these bars here. Just an example. My risk is going to be 36.5 points. Okay. So on a micro, we're looking at about a $75, let's just round it, $75 risk. So we want to get at least 1 for 1. Now, the midpoint of that opening range is right here at 41 points. So we're getting more than a 1-to-1 with a high likelihood of hitting. And in fact, in the past, it's broken through there. It's gone down to here already in the past, and we know this, it could even get to very easily as that's the established opening range that we'd have already established. So when we look at that, our target now is 120 points with a risk of 36. So we're looking at this trade as a possible 4 reward to 1 risk, a 1 to 4. 1 risk to a 4 reward, okay, with a very high likelihood of hitting. Let's just go over here for an example. You know, this would be really hard to catch. It really would. You know, I guess you could and then just put your risk down in that range. But it's still that one would be very hard to do. But you could possibly, let me just look at it real quick. Let me go to a long position now here. Long position. So let's assume we'd like to get in once it broke above here. So let's just say up in this range, and then we'd look at a risk where it had been before over here. Let's just say a 50 point. Yeah, right there. Okay, that would be doable also if you're thinking, well, it's been consolidating. The last time it went up, it looked like it was going to break. Let's just, when this thing reverses after piercing this halfway point, let's get into a long position once it's gotten clear of that midway point and looks like it may be taking off. So somewhere in this range, we could potentially think about getting into a trade. We'll put a 50 point stop just to be safe. We could even go up here to a like a 40 point, because this is kind of an established support range. Either way, it doesn't really matter. Just say we're going to risk about $100, and we know we're going to get, we don't know, but if it does do what we're saying, it will get at least to that opening range, which is 70 points, and we'll just go 100 points as a potential target. So a 2 to 1, 1 risk to 2 reward, and boom, we'd get in the trade. And boom, and actually we'd get a little bit more if we stayed in the trade. Okay, so those are just some examples, but this is something you definitely want to consider adding to your arsenal. Do some research. There's a lot of research out there, very easily found with Google. The opening range is used by retail traders, professional traders, institutions, as well as the initial balance. So right here, Investopedia has some really good information on it, and I highly recommend you do more studying on it and add it to your arsenal. So hopefully things will settle down this upcoming week, and we have some good trading. So I'm hoping to get out a few videos this week. I really appreciate everybody who's subscribed and who's been watching my videos. As this user did, he requested a video, and I asked if you have any topics you'd like me to do a video on. I'd more than happily entertain that. So have a good week this week. Coach Chris out.